Coming up on market shares, Dogecoin soaring as Trump announces a new government agency group headed by Elon Musk. We'll break down Trump's newest cabinet picks.
Plus, ExxonMobil chief telling newly elected President Donald Trump not to abandon the Paris Climate Agreement, how Trump presidency could impact the oil industry.
And we've got red arrows across the board as major indexes have the biggest loss since the election. Hold on to your wallets because market share starts right now. Good afternoon and welcome into Market Shares. I'm Michael Lamorte.
And I'm Sean Dempsey. We are about 15 minutes past the closing bell and the post-election rally seems to have come to an end. Let's take a look at how the major indexes closed on the week here. We'll start here with the S&P 500 here, Mike, down about 2.5% just about. A lot of people are starting to take losses, after the post-election rally last week. Donald Trump said on Thursday that he planned to nominate, vaccine skeptic, Robert F. Kennedy to lead the U.S. Department of Health, which definitely, it was a bit surprising here, so it definitely affected the markets. But more importantly, Fed Chair Jerome Powell said he isn't in a hurry to cut rates again, which certainly hurt the market this week in the S&P 500 in particular. Powell said on Thursday that he wants to keep the Fed's target at 2%, and he thinks that the economy is doing a solid job right now.
Yeah, I just want to point out, we talked about the election hype fizzling down. I don't think it's anything to panic about just yet. You're kind of expecting that election hype to die down, and not that it's expected, but it comes as no surprise that we're seeing a losing week. We've talked about how pharmaceutical stocks are down a bit. Moderna down 6%. That's definitely hurting the Dow, definitely hurting the S&P 500. And then also that RFK pick by Trump. He's come out very skeptical of pharmaceutical products as well. So that in and of itself is definitely going to hurt the Dow and S&P 500, but also the NASDAQ facing listing issues with its super micro stock. It plunged 85%. So we're going to start to see some hopefully in the green next week.
Definitely. Well, inflation hit a slight bump in October after a slowing down for 6 months, but is still in line with Wall Street's expectations. Consumer prices are up around 0.2% last month and are up over 2.5% from the year before.
Now, some of the bigger price increases were seen in used cars, up 2%, 2.7% rather, and airfares up 3.2%, and electricity up 0.2%. Inflation has cooled, though, considerably since peaking at 9.1% in June of 2022. And economists said that the trend looks good for another round of interest rate cuts. Now, Healthcare and Human Services, or the HHS, is the agency that oversees drug approvals, food safety, disease surveillance, Medicare, and Medicaid. And our Ben Bascuk is here with some of the biggest changes coming to the department and their effects on the markets. Ben?
Yeah, thanks, Mike. Well, 2 weeks ago, Trump transition co-chair Howard Lutnick made a promise about Robert Kennedy Jr. regarding the Department of Health and Human Services.
Remember Roundup?
But you're saying he would not be in charge of HHS?
No, of course not.
Okay, so he's not going to be
He's
like
not
an
going to be the secretary. No.
Well, he couldn't get confirmed, but would he be in an?
Funny, because just yesterday, shares of vaccine makers plummeted as President-elect Donald Trump nominated none other than Robert F. Kennedy Jr., a prominent vaccine skeptic, to lead the HHS. Stocks fell in the final hour of trading as reports emerged about Trump's expected pick. Moderna stock closed over 5% lower on Thursday. Shares of Novavax fell more than 7%, and Pfizer stock ended over 2% lower. While Pfizer revenue and profits soared during the peak of the pandemic, generating nearly $57 billion in combined sales in 2022, thanks largely to its COVID-19 vaccine and Paxlovid antiviral pill, the boom subsided by early 2023, and the company slashed its expectations for COVID-related revenue. By then, public health agencies already had an effective stockpile of vaccines to treat patients. Now, shares of those companies dipped even further in extended trading as Trump confirmed his pick in a post on the platform Truth Social, where he says Mr. Kennedy will restore these agencies to the traditions of gold standard scientific research and beacons of transparency to end the chronic disease epidemic and to make America healthy again. But what does that agenda mean for job and regulatory cuts? It looks like draining the swamp means nutrition regulators getting let go, entire departments at the FDA overhauled, and pesticides, herbicides, and GMOs banned. But Sean and Michael, RFK wasn't the only new appointment affecting markets this week. President Trump continues to spend his time filling key positions for his second administration.
Well, thanks, Ben. That's right. Billionaire Trump backer Elon Musk has been picked to lead a new task force called the Department of Government Efficiency, otherwise known as DOGE.
Political anchor Luke Radel joins us now. Luke, how is this new agency going to work?
Yeah, guys, Musk will work with former presidential candidate Vivek Ramaswamy to cut wasteful government spending. It's a role that Musk previewed in his appearance at Trump's infamous Madison Square Garden rally.
I've only got one question for you, and then I'm getting out of here because this is your stage. But we set up Doge.
Yes.
How much do you think we can rip out of this wasted $6.5 trillion Harris-Biden budget?
Well, I think we can do at least $2 trillion.
Yeah!
Yes.
$2 trillion.
By the way, the guy who very enthusiastically asked Musk that question is billionaire and Trump transition co-chair Howard Lutnick. You saw him earlier on, and remember that name for a little later on, because he should know better than to cheer for such a drastic cut in government spending. Let's just take a look at the numbers in terms of the government's budget. The biggest part of our federal budget is Social Security and Medicare, which Trump has promised not to touch. There's also defense spending and veterans benefits, which Republicans have been reluctant to cut back on in the past after backlash. And if you fired every single employee in the federal government, which for the record is also a bad idea, you still wouldn't hit the $2 trillion cut mark. It's also important to note that government spending is determined by Congress, not by an outside commission with a funny name. But that didn't stop the cryptocurrency Dogecoin, which is based on a meme, from rocketing upward in value. It's clear that from reporting in recent days, Elon Musk has spent lots of time around President-elect Donald Trump. He even joked about it last night at Mar-a-Lago.
Elon Musk, Elon. You know, he likes this place. I can't get him out of here. He just likes this place. And you know what? I like having him here, too. He's good. He's done a fantastic job. Really an incredible mind, and he's an unbelievable entrepreneur, sort of everything. I'm asking him, what do you do best? And we were not able to figure it out, but...
Well, we'll have to see if one of the things that Musk does best is cutting government spending, or if Trump finds a way to get rid of him before then. A final report is due on July 4th, 2026, guys, our nation's 250th anniversary.
All right, well, Luke, Ben, great to have you at the desk here now to talk about all these things going on. We're seeing a lot of cabinet picks come out, especially now hearing talks of a Treasury Secretary. We're going to start with Ben. What are some of these names that have been coming around, and what are the potential impacts that each of these candidates could have?
Yeah, so lots of names have been floated. Right now, kind of that forefront candidate would be Scott Bessent, hedge fund executive, very familiar with Wall Street, worked for George Soros in the past, so a lot of experience in the markets. He knows where those pressure points are. He knows what causes inflation. I think he'd be a great pick if there is a debt crisis to manage that. He knows the markets really well. Like I said, he's been on Wall Street. He's been visiting in Mar-a-Lago for recently in the past week. Very close to Trump, consulting Trump on a lot of financial issues, crises, and just not every day, but weekly at least having phone calls with the president-elect. He kind of spent some time away from Mar-a-Lago, and then a new pick maybe that Luke's going to get to is coming to the scene. If you want to take that from there.
Yeah, Ben, it's a day ending in Y, so I am going to disagree with you a little bit, my friend. I think that Howard Lutnick, the guy that you saw in both of the clips there, is the favorite right now for Treasury Secretary. Trump has been pricing loyalty very high in his picks so far. We've seen Matt Gaetz for Attorney General, RFK at HHS. I think he's going to price loyalty in here for Howard Lutnick. He is his transition co-chair, which means that he gets to hang around Mar-a-Lago a lot and help make some of those decisions. And I think as a billionaire, as the head of Cantor Fitzgerald, he's a top favorite for this pick.
When we look at the picks in general, though, and I will push back just a little, I think going off of experience, I don't know if that's something that Trump has prioritized with these other cabinet positions.
You mean experience with GOP boogeyman George Soros?
That could be it. That could be it. But when we look at Bessent as a candidate, I mean, he does have much more experience working in those regulatory agencies, working on Wall Street. He's kind of the favorite of more moderates and centrists. So I don't know. A lot of people on the Trump team has voiced concerns that he's not going to push those Trump tariffs as hard as someone like Lutnick might go along with Trump's plan and economic proposals going forward. We've also seen other positions come out, a possible trade czar role for Robert Lighthizer. That would not require Senate confirmation. He'd have a lot of influence over the Commerce Department, over the Treasury as well. It's just relations with trade. We know tariffs revolve a lot of this plan. I mean, a 200% tariff on Chinese auto manufacturing, 60% tariffs across the board, 20% on Chinese goods. So, I mean, tariffs are the economic plan here. I think that the kind that you're speaking of will push those a little harder than Bessent will going forward.
Yeah, now we're seeing a lot of picks that Trump has been making that have been loyalist to that MAGA agenda, that America First agenda. We could start to see possibly he might lean towards that candidate for that tariff plan, but you're seeing he's around your candidate for a lot of the shots that you were talking about over there at the wall. He's making his presence known. We'll see who he chooses hopefully later on this week and if his agenda will follow through. But coming up on market shares, Disney is beating analysts' expectations in its fourth quarter report. We'll have your top market mover of the week coming up.
Your daughter just had her first breakup. Do you A, put yourself in her shoes? B, console her?
Don't worry, sweetie. This is gonna happen a lot.
Or C, find her a new boyfriend?
Nice single boys. That was weird.
As a parent, there are no perfect answers. But you don't have to be perfect to be a perfect parent. Thousands of teens in foster care will love you just the same.
Dad, they took over my bedroom. Come on, come on. Okay, Dad. 1, 2, 3. Dad! You saved me. Dad?
Are you okay?
I'm fine, dear.
Your hero needs you now, and AARP is here to help. Find the care guides you need at aarp.org/caregiving.
Welcome back into market shares. Let's take a look at some of our biggest movers on the week. We're starting with AMD, actually, down about 9% on the week here, Mike. Advanced Micro Devices plans to reduce its global workforce by about 4%, so that's definitely not good for the stock itself. This move, which is expected to impact around 1,000 employees, comes as AMD wants to compete with NVIDIA, who is obviously the largest chip maker in the entire world. Despite AMD's efforts, NVIDIA holds more than 80% market share in AI chips, which is so impressive. So this really just comes as them trying to compete with NVIDIA and cutting workforce to try and increase profits.
Of course, we talk about NVIDIA a lot lately, but that move definitely trying to work towards a more focus on the AI chip development. Microsoft relies heavily on that AMD chip, that AI chip. So possibly placing more of a focus in that development in that area might start to move that company back into the green, but definitely that layoff of a near 1,000 employees is hurting the company.
It's super interesting too, because AMD's business is still doing well, but they just decided to cut costs just to help their balance sheet here.
Yeah, something that will help in the long run, but it looks as if it's hurting them right now, but not really. But I'd like to move on to another company, Disney. I was told I can't say the mouse, but I'm going to say it anyways.
Oh!
Gotta say it. The mouse is doing well this week, up 15%, nearly 16% rather. There's been a lot of reports that the company's profits and revenue as well have been on the rise. A lot of it having to relate to its theme park division. The company executives saying that a lot of the returning customers, the returning theme park enthusiasts, if you would so say, are coming back to the park. It's helping boost those revenues, and it's looking well for the shareholders. A lot more investment into the company.
Also, some of their movie business is doing much better this year compared to last year. I have it right here. Inside Out 2 became the highest grossing animated movie of all time this summer. Really, really impressive there. Also, Disney's Frozen 2, which was the highest grossing one, it passed that. So Disney's doing a really good job so far of, not only its streaming service, but also its movies, and then also, working in some of its park stuff that you mentioned too.
Yeah, as well, you talk about the movies, the streaming as well. They've been posting so many new TV series like Agatha all along. I just wrapped that show up. It was pretty good. A lot more Marvel movies coming out as well. So Disney, we might continue to see them grow. Definitely the executives of Disney are saying that they believe the future is bright for them as well. But from Disney to cryptocurrency, we talked about Dogecoin.
It's in the news.
Let's talk about Bitcoin. A cryptocurrency bull run is in the works right now as Bitcoin is up over $10,000 a share. Everything is looking great for Bitcoin and as well as other cryptocurrencies. We talked about Dogecoin on the rise, XRP is on the rise as well, and a lot of Bitcoin shareholders are saying that they believe that in the near future, Bitcoin could reach anywhere as near as $120,000. I meant to say that it was up $10,000. A Bitcoin price is $91,000. That's a crazy price for one coin.
A crazy price indeed. And Bitcoin has now risen 33% since Election Day on November 5th. So it has now risen a third of its value in the span of a week and a half, basically. So pretty crazy stuff there with Bitcoin. You know, I wish I was invested in Bitcoin, but I'm not.
Hey, well, instead of buying a Bitcoin, we were sucking on binkies when we were babies when it was getting popular. But.
Exactly. Well, when President-elect Donald Trump is inaugurated in January, he's expected to withdraw the U.S. from the Paris Climate Agreement. ExxonMobil has strongly called out against this policy change and the repealing of other climate legislation passed under the Biden administration. Here to break down why is market shares analyst Ethan Kraut. Ethan?
Yeah, Sean, some may have been a little surprised when they heard Exxon CEO Darren Wood say that Trump should keep the U.S. involved in global efforts to address climate change. Wood said that Exxon is planning to invest $20 billion through 2027 in carbon capture and storage technology, hydrogen fuel, and lithium mining for electric vehicles. However, these investments are reliant on tax credits included in the Inflation Reduction Act, which Trump has vowed to repeal. Wood's warned that if the IRA were to be repealed, Exxon's investments would have to change.
But ultimately, there needs to be an incentive to reward those investments and generate a return. And if we find that those incentives dissipate or go away entirely, then that would definitely change our investment plans. But I think the point we're trying to make is the world needs to have a long-term approach to reducing emissions, that you can do it in a very cost-effective way, but you need consistency of approach and policy. And so we're here talking about what some of those approaches could be to help solve those problems.
Now, this is not the first time Exxon has asked Trump to keep the climate initiatives from the previous president. As you mentioned, Trump is expected to withdraw the U.S. from the Paris Climate Agreement like he did in 2017. And 8 years ago, the oil and gas giant tried convincing Trump not to withdraw from the deal, but was unsuccessful. Now, in an attempt to ease concerns over the effect Trump will have on climate change, Woods called energy transition to renewable energy a long-term investment and said, quote, "I am not sure that any one administration is going to significantly advance the pace of the transition or conversely significantly slow the pace," end quote. But as we get closer to January 20th, we'll get a better understanding of what the Trump administration's climate initiatives will be and how Exxon and other companies in the renewable energy sector will respond. Guys?
All right, well, Ethan, Trump has promised to significantly increase U.S. oil production. Is Woods excited by this, despite all the movements towards making U.S. energy efficient?
Exxon is not expected, according to Woods, to increase oil production under the Trump administration, at least for the short term. Trump ran on a platform of drill, baby, drill. But Woods said, quote, "I'm not sure how drill, baby, drill translates into policy," end quote. So I'm not exactly sure what policies Trump will impose that will help produce oil. Now, also, Woods said that right now, oil production is not really being restricted under policies under the Biden administration. So it's interesting to see if Trump will actually produce or help Exxon and other oil companies produce more oil under his administration.
Ethan, when looking at the stock market, how has Exxon's stock performed since Trump's victory on Tuesday?
Exxon really hasn't swayed one way or the other since the election. This past week, Exxon was down just under a point, as you see on your screen right now. And since election night, Exxon's been up a little less than a point. So not much movement because of the election. It is worth noting, oil companies in general are very reliant, their stock prices are very reliant on the price of oil and gas at that time. So if we see oil prices come down under the Trump administration, you could expect to see Exxon's stock price come down, and it'll be the same vice versa if oil prices, came up. So it'll be interesting to see how Exxon stock performs in the next 4 years, guys.
Thanks, Ethan. Coming up on Market Shares, congestion pricing is making a return, what Hochul is proposing after the break.
If you're buzzed and doing this, to make yourself feel okay to drive,
ZWX.
You're not okay to drive.
YGKLVW. Regular you.
And welcome back into Market Shares, a show you'll always be welcome to. New York City, though, not so sure, because Governor Kathy Hochul just announced that her congestion pricing plan will begin in January with a $9 toll. Hochul placed a pause on the tolling plan this summer, just weeks before it was expected to begin, saying she would reduce rates to appease critics, saying the prices were just too high. The goal, to get cars off Manhattan's crowded streets and improve air quality while also raising money for the city's transit systems. The plan, which is the first of its kind in the nation, could still be derailed. President-elect Donald Trump has threatened to kill congestion pricing as one of his first acts in office. At least 9 lawsuits have been filed over congestion pricing in recent years. Safe to say this will be an interesting story to follow.
And conspiracy theorist Alex Jones' media company will have a new owner. In an ironic twist, The Onion, a satirical news company, just won the bankruptcy auction for control over InfoWars, a far-right conspiracy website. The company was sold off as part of a defamation settlement after Jones falsely called the Sandy Hook Elementary School shooting a hoax. The Onion's bid was backed by the families of 8 victims and 1 first responder. The comedy site says it plans to relaunch InfoWars as a satirical version of itself and will include an advertising partnership with the gun prevention group Everytown.
Soaring into this next story here, Spirit Airlines took a nosedive this week. According to the Wall Street Journal, the airline is preparing to file for bankruptcy after merger talks with Frontier collapsed. Spirit stock has fallen over 90% this year. Take a look here on your screen. Spirit's timeline over the past 2 years. Back in February 2022, Frontier and Spirit first agreed to merger before JetBlue stepped in. Then fast forward to January of 2024, the deal was blocked. By the time Spirit came back around, Frontier, they were already on their way out the door.
And Diamond Sports Group has announced a commercial agreement with streaming giant Amazon that will allow in-market fans to watch their teams through Prime Video. Pricing and a start date have yet to be determined, but Diamond announced earlier this week it would offer single-game offerings for direct-to-consumer NBA and NHL games beginning December 5th, with individual games starting at just under $7. This just expands on Amazon's commitment over the last 3 years to join the streaming industry, notably the addition of Thursday Night Football to Prime Video.
And sticking with sports here, for the consumer, hitting a bet is a reason to celebrate. For sportsbooks, not so much. Winning bets on favorite NFL teams are starting to cost DraftKings and FanDuel millions of dollars in expected revenue. With more on how the companies are responding is Market Shares analyst Brennan Andrews. Hey, Brennan.
Hey, Mike. The fourth quarter is where a game is typically decided, where teams show what they're made of, but sports gaming giants DraftKings and FanDuel have felt the pressure not to fumble their quarter 4 earnings. Flutter Entertainment, FanDuel's parent company, announced that they will cut their revenue guidance by $50 million as bettors have been on a hot streak this NFL season. Looking at your screen, you can see that FanDuel points to week 6 of the current 2024 NFL season as its worst payout week, where 12 out of 14 teams were favorited and they won their game. That means that the sportsbook is paying out more, and they're paying out more, and they are spending more to pay out these winning bets. This is a problem. This is a problem for the company, as DraftKings chief executive Jason Robbins put, while we experience the most customer-friendly stretch of NFL sports outcomes we have ever seen. Patterns like these in the NFL can dig into the pockets of betting platforms, such as Week 8 of this NFL season, where Macquarie Equity Research found that sportsbooks held a 2% hold rate for industry-wide, down from the usual 9% that they are left with after paying out winning bets. This decline for DraftKings and Flutter goes against their overall trends for 2024, as both companies posted year-over-year Q3 growth of 39% and 29% respectively. The U.S. explosion of sports gambling will come with growing pains as these platforms try and accommodate the masses while staying in the green.
Yeah, Brennan, you talk about all the explosion of bets that are going on. It doesn't look like sports bettors are going to slow down. So how are companies responding to their losses?
Yeah, so Flutter is an international conglomerate. They have betting agencies all over, and they're very territorialized. But DraftKings is owned and operated within the United States. They are operated out of Boston, and they're going to focus on reducing customer acquisition costs. That's promo deals and first-time user experience to overall reduce their company-wide expenses. Guys?
Well, coming up on Market Shares, a high-stakes boxing match is taking place tonight. How much the two fighters could be taking home in 90 seconds.
Jason, let's go see your room.
What do you think? We kept it a little spare, so you can decorate it how you like.
Dinner! Go?
Excellent. Soccer is fun. Yeah, I saw you guys out there. We're the family. Yeah! Oh, I thought you were on my team.
All right, welcome back to Market Shares. Netflix is making its live sports debut tonight between YouTuber turned boxer Jake Paul and former heavyweight champion Mike Tyson. This matchup could be the most watched boxing match of all time, as the sport is normally constrained to just pay-per-view.
Now both boxers are in for a hefty payday. While the exact amount has not been revealed, Paul stated he could be making $40 million, while Tyson is expected to make around $20 million. Coverage will begin at 8 p.m. tonight. So Mike, who you got?
Well, I'm taking Iron Mike. You know, they talk about
Mike
his
and
age.
Mike.
Yeah, come on, I gotta go with Iron Mike. But also, you know, talk about the earnings differential there. Mike Tyson should be making 10 times more than Paul makes.
Yeah, I'm personally going to take Jake Paul just because he's a little younger. You know, he might be a little faster, but we'll see what happens there. And that's all the time we have for you on this episode of Market Shares. Be sure to follow us on Twitter and Instagram at CitrusTV News, and like us on Facebook. I'm Sean Dempsey.
And I'm Mike Lamorte. Have a great night, Syracuse.